The air crackles with a strange energy, doesn't it? You, sitting there, scrolling through charts, listening to pundits, trying to make sense of it all. Information overload, a relentless tide. But are you truly seeing what's happening? Or are you just another sailor caught in a storm that's happened before? The year was 1929. The Roaring Twenties had reached a fever pitch. Fortunes were made overnight, fueled by wild speculation and an unshakable belief in endless prosperity. Then, the market crashed. Billions vanished in a matter of days. Lives were ruined. And yet, the story of 1929 isn't just a tale of economic collapse. It's a mirror, a reflection of the timeless human flaws that drive markets, the same ones that can lead to your financial ruin. It's a story of greed, of ignorance, of a collective delusion that blinded even the most seasoned investors. As Benjamin Graham, the father of value investing, so wisely pointed out, the investor's chief problem, and even his worst enemy, is likely to be himself. In this video, we're not just going to revisit the events of 1929, we're going to dissect them. We're going to unearth the hidden mechanisms, the subtle cues, the psychological traps that led to the crash, and more importantly, we're going to extract the actionable lessons that you can use to protect and grow your wealth today. We'll journey through the key events, the underlying causes, and the enduring principles that separate the successful investor from the masses. Because the truth is, history doesn't repeat itself, but it often rhymes. And by understanding the rhymes of 1929, you can learn to dance to a different tune. A tune of informed decisions, a tune of sustainable wealth, a tune of true financial freedom. Are you ready to transform your fear into foresight? Imagine the 1920s, a world transformed. Cars, radios, and a sense of limitless possibility. The stock market, the ultimate playground. Everyone, it seemed, was getting rich. This new era was built on a foundation of optimism, a belief that the market could only climb higher. Sound familiar? Consider the echoes of today. The hype surrounding certain sectors, the breathless predictions, the relentless pursuit of the next big thing. Just as in the 20s, leverage played a dangerous role. Margin debt allowed investors to amplify their gains, but also their losses. A small downturn could trigger a cascade of selling, turning paper profits into real losses. Today, we see similar patterns with complex financial instruments. Derivatives and other leveraged products create the same potential for outsized risk. The allure of easy money is a siren song. Chasing trends, buying into the hype, it's a recipe for disaster. Remember the companies that seemed invincible, only to crumble. The same is true today. How do we avoid these pitfalls? Learn to identify market bubbles, excessive valuations, irrational exuberance, the influx of inexperienced investors. These are the warning signs. Develop a framework for assessing risk. Don't be swayed by the herd mentality. Do your own research. Think critically. The greatest weapon you have is your ability to think independently, to question the narrative, to turn fear into informed action. The echo of 1929 calls to us still. Will you listen? In the late 1920s, the market became detached from reality. Stock prices soared, but the underlying fundamentals of the companies often didn't. This disconnect, this illusion of value, is a dangerous game. It's a game that leads to crash. The key is intrinsic value. What is a company truly worth? Not what the market says, but what its assets, earnings, and prospects dictate. Value investing, as championed by Benjamin Graham, is the antidote. It's about buying assets at a discount with a margin of safety. This margin protects you from the inevitable errors and uncertainties of the market. But who was sounding the alarm? Financial journalists, analysts, and advisors often fueled the speculative fire. They were incentivized to promote the market, not to protect investors. You must learn to verify information. Do independent research. Don't blindly trust anyone. How do you begin? Start with fundamental analysis. Evaluate financial statements. Assess management quality. Look for competitive advantages. These are the building blocks of true value. Remember the long-term investment horizon. Patience, discipline, and a focus on value are your greatest allies. The market will test you. It will try to shake you out of your convictions. But if you stay focused on value, you will prevail. The echoes of 1929 remind us true wealth is built on a foundation of understanding, not speculation. October 24th, 1929, Black Thursday. The market began to unravel. Selling accelerated. Prices plummeted. It was the beginning of the end. The speed and severity of the crash was stunning. But the seeds of this collapse were sown long before. Systemic risks amplified the crisis. Interconnected financial institutions, a lack of regulation, and a fragile banking system created a perfect storm. Sound familiar? These risks are still present in modern financial structures. The narrative of unpredictable black swan events is a convenient myth. Market crashes are often predictable. Historical patterns and indicators can provide early warnings. Learn to recognize them. How do you protect yourself? Diversification, asset allocation, and hedging techniques are essential tools, but they are not enough. You need a well-defined investment plan and the discipline to stick to it. Market volatility will test your resolve. The psychological challenges of investing in a crisis crisis are immense. Fear, panic, and the temptation to make rash decisions. These are the enemies of the investor. But remember, the market is not your enemy, it's a tool. And like any tool, it can be used for good or ill. By understanding the risks and by having a plan, you can navigate the storm, you can protect your capital, and you can even profit from the chaos. The echoes of 1929 remind us true strength comes from preparation, not panic. The 1929 crash was not an isolated event. It unleashed the Great Depression, unemployment soared, social unrest spread. The economic consequences were devastating, but the story doesn't end there. Market crashes are intertwined with economic cycles. Understanding these cycles is key to long-term investing. Consider the concept of creative destruction, the process by which old industries are replaced by new ones. It's painful, but it's also the engine of progress. Does a market crash always lead to economic collapse? No. History is full of examples of markets that have recovered and thrived after significant downturns. The key is to recognize the difference between short-term volatility and long-term trends. What is the long-term investment strategy? It's based on value investing principles, patience, discipline, and a focus on fundamentals. These are the cornerstones of success. Understand that the economic cycles are a constant. Stay informed. Adapt to changing market conditions. The world is always changing. Your investment strategy must change with it. The echoes of 1929 remind us true wealth is built over time. It's not a sprint, it's a marathon. Are you prepared for the long run? The market is a battlefield of emotions. Behavioral biases are the weapons. Fear, greed, confirmation bias, loss aversion. These are the traps that ensnare investors. In 1929, these biases led to disastrous decisions. Investors bought at the top, sold at the bottom. They followed the herd, ignoring fundamentals. Emotional intelligence is your shield. Self-awareness is your sword. Learn to manage your emotions. Make rational decisions. Don't be a victim of your own psychology. The myth of market timing is seductive. Trying to outsmart the market is a fool's errand. Adopt a long-term, buy-and-hold approach. Focus on value. Focus on the long game. How do you develop a sound investment mindset? Journaling, goal setting, and stress management. These are your tools. Write down your thoughts. Define your goals. Manage your stress. These practices will help you stay focused. They will help you stay disciplined. The echoes of 1929 remind us the greatest returns are earned by those who control themselves. Warren Buffett famously said, "Be fearful when others are greedy and greedy when others are fearful. Learn from the past. Embrace a long-term perspective. Take control of your financial future. The power is within you. Are you ready to use it?" We've journeyed through the Roaring Twenties. We've witnessed the crash of 1929. We've uncovered the hidden truths that shaped that pivotal moment in history. What have we learned? The dangers of market speculation, the importance of fundamental analysis, the risks of systemic failures, the power of a disciplined investment approach. These are the lessons that will guide you. Remember, history is a guide. The market is cyclical. The same mistakes are often repeated, but you don't have to repeat them. You can choose a different path, a path of knowledge, a path of wisdom. Continue your financial education. Do your own research. Challenge the consensus. That's the core of what we do here. Data-driven insights. Demystifying complex financial concepts. Empowering you to make informed decisions. We are here to help you navigate the complexities of the market, to help you build a secure financial future. Remember the words of Warren Buffett. Risk comes from not knowing what you are doing. Embrace lifelong learning. Develop a deep understanding of the markets. The unfolding story of 1929 is not just a story of the past. It's a story that continues to shape your investment future. Are you ready to write your own ending?